right, we're looking at Amazon today. You can see from the low to this high, it took exactly a range of 72 points from 41 to 113. This is the tech stock bubble of 2000. It took 126 days from low to high. That's a pretty nice rally. What you're looking at, think about it, from 41 to 113 is almost a tripling in price, or if you like, 175% rally. So that's a very amazing rally in the short space of 4 months. How does that compare with what's happening now? Well, from this low in March to the high was 122 days. We doubled in price, and 122 is almost the same amount of time as the prior tech stock bubble. I think this is a bubble. You might disagree, but the reality is it is vertical, and the concept here is you see that a stock go vertical, it's not going to last forever. You can't go vertical like this for very long. And I like the fact that the number of days, 122, is almost the same as the number of days for the initial tech stock bubble back in 1999 into the high. Now, maybe we didn't rally quite as much. This was 175%, and this one was 105%. So, but think about it this way. Back then, Amazon was a much smaller company. Now, market cap over $1 trillion. This is huge for a stock like that to go from 1685 to 3,344 in the space of just over 120 days. That's a pretty big move. I mean, major stocks, big cap stocks, it's hard for them to double in price. But it did it. So that's pretty amazing. This is no guarantee that it's going to sell off. So I'm not telling you to go out and short the stock. For all what we know, it might just keep going higher. But there are other things to watch for that will confirm that a correction is starting. And that's where I would like to invite you to a 3-month trial subscription. Send me an email, jamessmith@gannanalysis.net. Ask about the cost of a 3-month trial subscription. We'll give you a much more detailed report that'll confirm one way or the other that we're starting a correction. And I believe we probably will be starting a correction shortly, but there are certain levels we have to close below to confirm it. So send me that email, see if you like it, and we'll hopefully help you out. One other thing before we go, I want to tell you, here's some free Gann advice. Gann said that you can divide any swing move into 8 increments. A 3/8 retracement, a 4/8 retracement, or 50% retracement, 5/8 retracement. There are 8 divisions of this range that starts from here and goes to this high. Now, the point that I want to get across is that Gann believes so strongly in this concept that each range could be divided into 8 parts. He also used it as a projection technique. He said the last major low before the high was often, not always, but often a 50% retracement of the entire swing move. So the fact that we have this base here off which we catapulted higher is 1685, a 50% retracement of swing. That means we probably have a high at 33.44. It's pretty cool. So it's just one more bit of analysis from Gann suggesting we may have a top. And the fact that, we've rallied 122 days, low to high, just as we did back in 1999, we rallied 126 days, low to high. It's pretty amazing. I think the evidence is interesting. There's a lot more I'd like to tell you, and I think you'll find it interesting. For 3 months, try out the service, see what you think about it, and we'll go from there. At the worst case, you're out a very small amount of money. You'll learn a lot of Gann techniques, and you can go off and do whatever you want. But if you really like it, you continue. So it's worth the money that you spend Think of it as tuition for an education in Gann. You'll learn quite a lot. Thanks for your time. Look forward to hearing from you. Remember, James Smith at GannAnalysis.net. Send me an email. Let me know you want to try the 3-month trial subscription. You want to know how much it costs. Thank you very much.